What's up, YouTube? It's Todd Horst here. It was a crazy day in the market. Actually, I just love it when people, see stocks move like a fraction of a percentage and they start freaking out like it was some crazy day. Uh, yeah, so SPY today had a bit of a correction, which is great. I've got Shopify already pulled up. They already went down yesterday and already had a bounce back up. Microsoft had a bit of a reset, nothing major. Apple, same thing, nothing major, small down day. Um, let's see, let's just go to SPY. Small down day in SPY. 313 area, definitely still above the 20-day SMA, so nothing to be concerned about. You can still see MACD is still pulling up and ready to roll over. Although the RSI did take a hit on today's downturn. But yeah, anyway, I just love when people freak out over nothing. So on the small down day, although I didn't enter in at the best time, because I do most of my trading in the morning, so that way I can move on with the rest of my day. I'm in Eastern time, which is great because I'm aligned with the markets. So I typically have all my trading done by 10. I only really watch the markets from, we'll say 9:45 to 10:15. So yeah, so you'll see most of my trades occur in that time frame. So if you followed me today and you got into my positions after I did, which I saw a couple people did take the MA trade, um, and a bunch of those got, if not everybody, got better fills than I did. And I talk about that a lot where my style of trading is not insanely time sensitive. And in fact, I don't necessarily let orders sit out there because I just want to get it open. So yeah, I'm typically not worried about the couple dollar difference there. The market's closed right now. That's why these numbers are all out of whack. But I think Apple, MA, and Disney are all down. Those are the three positions I opened today. They're all down by a couple bucks, and that's just part of my process and something I am expecting. So people that do follow along can get better fills, and that's good for them. And I'm happy. I'm not really willing to sit around and play what ifs. Maybe the market will go up, maybe it will go down. So I'd rather personally just enter and maybe potentially lose a couple bucks. And remember, since I'm closing that at 50%, you can take that difference. So I think I opened this up for 177, and I think somebody opened up for 212 or something like that, or we'll say 200. So there's a $20 difference. I'm closing at 50%, so I can divide that by two. That means they'll ultimately walk away with 10 more dollars, which um, if you can get that, by all means get it. But for me, that's not worth sitting around and waiting to open a position. Um, it might be 25% or something like that, where the position does actually move in my way immediately. And had I entered in later, maybe I would have gotten a worse fill. So all that stuff in my head balances out. Same with commissions. I don't really worry about commissions. That's part of the game, and eventually everything will be free anyway. So anyway, that's just some of the things I was thinking about today, because basically things corrected, but not really by much. But I will say I'm more optimistic with where things are at now. So with Microsoft, um, uh, yeah, Microsoft not so much. Um, Shop, I think I'll be entering in a position. I was hoping for more of a pullback, but if it's going to go ahead and form a base here, um, then I'll go ahead and enter in a position in the next day or two. Um, yeah, so let's go over the charts of the ones I did today. I opened up MA, that's the 295 300, and I sold that for 177. I opened up Disney for 154 and opened up Apple at for 165. These are all, yeah, all for, no, two of these are for August and then one for September. I was thinking I put one out. Let's go over to the positions. Wow. Okay. So Apple, this was I was a little bit more concerned with where Apple was going. Um, so let's pull their chart up one more time. Um, I still see some downside here, and so I didn't want to get into an overly aggressive position. So if I double click here, I can see I went with the September expiration to give myself a little bit more time, and then I went with a 42, which you've seen in the past. Maybe Microsoft I'll go with a 42% in the money, but Apple I'm super bullish in, and I might go something like a 47 or 50% chance in the money. So this one I did a little bit more conservative than what I normally do at the 42, and I gave myself another month expiration. Um, if you're wondering why I don't do weeklies, I probably talked about this before. I'm not sure if it's been on this series or in other videos, but typically weeklies don't have enough liquidity. It's fine to open a position, but when you go to close at 50%, you sometimes have issues closing. I have a position in my other account right now that's been hovering at like 60 to 80%. Return already, and normally I close at 50. I have a 50% closing order, but it's not filling because there isn't the demand there. So that actually was a monthly, but it's just in a ticker that doesn't have a lot of liquidity in options in general. So that's just, fair warning. But you get that even with really liquid symbols, unless you're talking about SPY or something like that. Even something as liquid as Apple, you can have issues on the weekly on closing, not on opening, has been my experience. Okay, so that's 42% MA. Let's get that open. This one's 45 days. Now, when I opened this up, it was around the 46, 45%. But again, since I did that in the morning and then the market came down after I entered the positions, this currently sitting at 52%. So if you haven't opened the position yet and you want to follow along, I would suggest getting the 295 spread, or even 285, 290 spread to keep the premium about the same. Okay, well, market's closed, so it's hard to tell what that would actually get you. But you might want to go with the 290, 295 and to get a little bit better strikes than what I got, or you can choose the same strikes I got and get better premium. But given the two choices, I typically go with something a little bit safer, with slightly less premium or my typical premium that I'm looking to get. Okay, so we went over the Apple chart. Let's go over MA. I really do think financials are about to turn around here. This is sitting right on the 20-day, which is good support. Even if we break through that, that's not a big red flag for me. The 50-day is more respected by a lot of more traders. So bouncing off the 50-day is more something like I would expect, and it might meet up somewhere in here at the 296 range anyway, till they both progress to that point. But you can see MACD is rolling over, and RSI is at a good spot where it could easily turn into a red hot kind of bull market. But yeah, in my alert, I said a bunch of the financial tickers are looking like they're all about to roll over. So where tech was a little bit oversold and had a good pullback today, I think it's the reverse coming up for financials, where they will either tread water for a little bit here, or more than likely we'll see in the next couple days go up. Okay. So Disney was the last one. I guess I don't necessarily know what to say here. I like Disney as a company. They own an insane number of properties, and then the parks. They have a lot of things going for them, and I don't see much downside risk at this point. We've been consolidating in this range, and they haven't really recovered near like the rest, a lot of the competitors. So if you're taking Disney streaming service versus Netflix, Netflix has outperformed them in this period. If you take the other movie studios, I could be wrong, but I think they've recovered slightly better. But when it comes to Disney, I think the biggest drag on them has been the parks. And then second drag would be the movies, since they're not releasing a whole lot in theaters right now. But over the course of the next month, I think, at least in my area, I know there's still plenty of areas that are largely affected by the virus, but things are getting better. They're not back to where they need to be, obviously, but whenever things are getting better, that will allow a stock to, obviously regain some of its position. So at the very least, I think it will stick around this area, but if anywhere I don't see it going down, I see it going up. And so because I have I sold the 110. Let's go back over to the chart. 110 is right here. So it's right at this support level, which again, I don't see it going down there anyway, but if it does, there's strong support there. And if it stays where it is, perfect. I'll come out, and if I held to expiration, I would get full value if it stayed exactly where it's at. Or again, obviously I'm expecting it to go up, and that will allow me to close out early. So that's my feelings on those. I don't know if there's anything else I need to talk about. So right now we're at 29. I think I was up at 32 at the beginning of the day. But of course, typically speaking, when I enter positions, I expect my account to take a hit for a couple days. And I've said it before, that sets me up for coming days to reach new highs, but I have to take that hit in my account initially. Also, because the market's closed and these numbers are a little bit messed up, I don't know exactly what I have, but we'll say it's around 29, and then I've got still a room for probably 2 more positions, and then have a little bit of spare change, but I'm not in any rush to enter positions. I know I said that, and then I entered in 3 today. It's just kind of how it goes. I trade what I get excited about, or what I see where I think I see opportunity. I'm human like anybody else. Not that I think any of these positions are bad, but just saying. Yeah, and so here's a general look at the account for the past month. It's been a pretty good month. If I go out to 180 days, it'll probably take a minute to load. There we go. Yeah, so we can see back in here is when started the challenge, and then I started to build it up, and then immediately was hit by Corona, and then the climb since then. So it's obviously part of that is the recovery of the market and the Fed and all of that. I'm not going to claim that that's all me, but it is sort of proof that you can trade the market in the market direction. Right now, I don't buy puts. I don't sell calls. If the market isn't looking favorable from my standpoint, then I don't enter in positions, because in my opinion, we're in a bull market, and so I'm only going to enter in bullish positions. If it comes to a situation where I believe we've turned the corner and we're in a bear market, then I would do the reverse, where I'm not going to sell puts or buy calls. I'm only going to do something that's the general direction of the market, because if you're in a bull market and you buy a put expecting a stock to go down by whatever 3 or 5%, it might do that, but it might only be for a day, and it might not allow your position, if you're in options, to be profitable because of all the different variables. So from my perspective, it's not worth trying to play both sides, the up and the down. Instead, I'm going to use the down moments as a again, back to the bull market, I'm going to use the down moments to enter in positions until the market gives me indication that we're into a bear market. So anyway, that's my thoughts for today. Let me know if you have any questions. Thanks, everyone.